Hey, what's up guys, your boy Precision FX, the one and only Eagle. So in today's video, I'm going to be actually showing you how I personally trade the CRT, which is the candle range theory, right? So in this video, we're going to be looking at NAS 100. We're going to be looking at last week trades in which I caught, right? My group and everything like that. But basically, it's just a trade that I caught. And today, I just want to show you how I actually caught that trade. Subscribe, like, share, and push on the notification bell so you're notified every time I drop. And I promise guys, I'm gonna drop every Saturday from now. But yeah, let's just get into the video. And yes guys, right now you are looking at the NAS 100 right there. I just wanna highlight something for you guys. So with the candle range theory, we're actually focusing on trading within a single day candle, like previous day candle, right? We're expecting movements in which happen by either sweeping the high or the low. Let me just make a quick example right here, up here. So let's say you mark out the high, the previous high of a daily candle and the previous low of a daily candle, right? And the market is actually moving in an uptrend or a downtrend, doesn't matter actually. But as you can see, right now we're expecting that the market either sweeps the high or it sweeps the low, right? If it sweeps the high, we're expecting it to come back and sweep the low again, and that's our trade, right? We don't expect that, okay, it sweeps the high, now it sweeps the low, now we buy again and everything like that, right? We're expecting one move, right? For example, if the market is actually going in an uptrend, right, we're waiting for it to sweep the high, then we target the low or the 50% right there, right? So how do you see the 50%? So these are the settings right here, pretty simple, pretty basic. So that's your 50% in which you can target, right? That's your 50% in which you can target. So without any further ado, let's get on the chart, guys. Let's get on the chart. I'll lie to you guys, I'm really happy to be back on YouTube. I've been busy, but yeah, now I'm back. Even though I'm writing exams, but I'm back right now. I'm in a good space in which I can make videos for you guys. So yeah guys, right now we're looking at the daily time frame. So now with this strategy, the time zones don't actually matter. You have to remember that, right? The time zones don't actually matter, since you're actually just looking at the daily chart, the daily time frame, and actually using that, right? So now as you can see, you have our previous day high and our previous day low, right? So now from here, we marked out our previous day high. Remember step one, mark your previous day high, mark your previous day low. Now go to lower time frames, and that's where you actually see everything, right? So now we just highlight which one is which, right? Previous day high. I'm actually just doing this for you guys. I just draw lines simply because I do understand what I'm looking at, right? Previous day low, and you can see. So now we're expecting what we said, right? A sweep on the high, then we go to the low, or a sweep on the low so that we go to the high, right? And as you can see right there, we have a previous day high and our previous day low. So now we're expecting that the market actually sweeps the previous day high and actually target the previous day low, or our 50% in this range, right? Or it does come in a scenario whereby the market is actually sweeping the previous day low and targeting the previous day high, or just targeting the 50%, right? What I suggest for you guys is firstly start by targeting the 50% before you do anything else, like targeting the previous day high or the previous day low in terms of your TP, right? So that you can catch a nice trade in which you can't stress. And I won't lie to you guys, when you're targeting the 50%, it's more accurate and more nicer or comfortable for your psychology, right? But there's more than just the market sweeping the high and you just entering, right? You have to wait for a certain entry model. Now here's the entry model. It's pretty simple. Again, example, previous day high, previous day low, right? Now the market is actually moving in an uptrend, swept our high. So now we don't just enter when it comes inside, right? we enter while it retests on our imbalance that's going to be made right there after a market structure shift. It's always there. You just have to look on the lower time frames, right? So right there, you're going to be looking at a market structure shift and your imbalance right there. That's going to be happening right there. Excuse the drawings, but this is a simple example. So yeah, market structure shift is going to happen right there. Then your entry is going to be in the imbalance or the fair value gap right there. Then you target using the Fibonacci tool, which is your 50% right here. You're going to target here, or you're going to take it lower to the previous day low and target that low right there. So now let's actually get on the chart so you can actually see, right? So yeah guys, for you to actually get an entry model, you have to go on the lower time frame. I'd suggest the 15 or the 10, the 30 minute, right? So now here, after this sweep, right, you can actually see that the market hasn't actually given us something valid in hand. So you just have to wait for it to go, right? And as you can see right there, the market actually gave us something, right? You can see that it actually made a market structure shift right there. That's our market structure shift, right? And right there, we have our imbalance or fair value gap, right? Let me just highlight for you guys right there. As you can see, now we have our fair value gap right there or imbalance. So now there, that's actually where you do take your trade, right? That's when you say, okay, now we're entering, risking nicely. Now we're entering right there and actually going for the 50% or the previous day low. So now guys, what you have to have in mind is in every entry that you can take in terms of using smart money concepts is that the market can actually do something like this, right? It can go down, break this low right here, go a little bit down again. Now this is just a trick for you to enter more trades. As you enter more trades coming down, it can retest right there and go lower, right? So now this is just a move that kills a lot of people, right? Actually kills a lot of people. You know, like you're coming right here, the market is right here, goes down, and you enter more trades thinking, okay, now it's fully going down. Then it comes back up. Now your positions, since you are on NAS 100 or any other currency, they are taken out, right? So it's simpler to enter one position according to your account size and everything and let it go down, then retest unless there is a displacement to the downside, right? Wait for it to retest right there, then enter, right? So basically your entry is right here. So now we put our tool right there. You see short position, we enter our short position. Our full target is the previous day low, which is what I actually target, and your stop loss above that high. See that high right there? Now for the spreads, for you not to be taken out, since a lot of people use different brokers, is that you can actually put it up there just to give it a little breathing space, right? It's important to give the market a little breathing space, guys, so that your trades are not just taken out because of spreads, right? So now let's play and see how it goes. Firstly, let's just do this so you guys can see that there actually has been the trade has actually been triggered on the 50% of the fair value gap. Now, how do you see the 50% of the fair value gap, right? You actually do this. The 50% of the fair value gap is actually determined by this line right here, right? That's your 50% of the fair value gap that you need to enter at. And yeah, right here you can see that the market actually broke this structure. Now it's coming back. Now possibilities of it retesting on this fair value gap, they are high, right? So I'd suggest that you enter more trades right there. You enter more trades right there. And yeah guys, let's just see how it goes. So this is our expectation. Retest right there, then the market actually targeting lower, or you can use our Fibonacci tool from that high right there to that low right there. Remember, you don't use that high that was formed, you use the previous day high, right, to actually determine with your Fibonacci tool. So now let's see. And as you can see, simple, easy and straightforward, right? Simple, easy and straightforward. The market actually retested right there on the 50% of the fair value cap along the order block and targeted it fully, right? So for you guys, I want you guys to target the 50% just for now until you're comfortable enough holding the trade lower, right? Holding the trade lower. So now you can see that the market is actually giving you something that you're actually comfortable with. That's when you can actually maximize your trades and actually go down, right? But yeah, guys, this is as simple as it gets. So now for this strategy, I suggest that you guys use firstly currency pairs just like Euro USD, GBP USD, USD JPY, and yeah, and I forgot something, and USD CAD, before you can actually come to gold and the indices, since they are volatile, right? So since we are different traders, right, in terms of targeting the TPs and everything, right, so you know that the lows that are made in the market while it's in an uptrend, and when it does a market structure shift, they can become your liquidity. By your liquidity, I mean they can become your your take profit points. Firstly, that low right there can be your take profit point, and that low right there can be your second take profit point. So for example, you'd be looking at something like this: your first TP right there, your second TP at the 50%, your third TP at that low right there, and your fourth TP again on this low that has been created right here. And right there, you got it, and that's your final TP down in there. And yeah, guys, that's as simple as it gets. If you have any questions, you can put them in the comments and I'll answer them. Or if you want to talk directly to me, you can click on the link below the description, where you're going to find my Telegram channel, in which you can join and actually, get free weekly setups with other people in the community, right? And yeah, guys, that's gonna be it for me today, and I hope to see you next week with another video of the trades I'm gonna trade for the week, right? And tell me suggestions of the videos I should do, besides just giving you guys strategies, what you guys want, and yeah, we're gonna take it from there. And yeah, guys, that's gonna be it for me today. Love you guys, and I hope we do actually make another video. And yeah, that's gonna be for me today. Precision FX, your mentor, signing out.